JP has raised the forecast to 5.1. Yeah, previously it was at 4.9%. I think you're raising the question that many clients are raising. On the one hand, commodity prices are going to have an upward bias toward pricing. Yeah. And on the other hand, I think this is a cause for concern for midstream margins. I think in general, consensus number has moved up a little bit than before, but their question marks remain.
To what extent do you think that oil is going to impact the economy? What's the level of exposure? What do you think that is going to happen on that front?
Yeah, it's clearly a negative, but in the APAC area, perhaps China is slightly less negative in that sense. There are other markets where, the impact will be greater on balance of payment. China, our macro estimate is that for every 10% increase, annualized average of oil prices, and take 2022 as an example, GDP growth is going to come down by about 10 bips. And CPI is going to go up by about 30 bips. So I think within our forecast, we are factoring in some of the potential impact because of high oil prices.
Okay, and so you've raised your GDP estimate. You're quite bullish on the stock market in various structured contexts, and we can go into that. But just give me a sense of the strategies that we've heard over the past week or so from NPC and from the political side. How do you think they're going to play into equity performance? Do you like what you're hearing on that front?
It is not exactly the same as what we had anticipated. All the fiscal transfers and then the tax cut will be going to the grassroots level of governments and enterprises. So it's about saving local governments, enterprises, and then save households and jobs. So it is good for mass market consumption, perhaps to, a greater degree than we had previously anticipated. So that's a notable point. Yeah.